Today we have NXTMOVES on here. And this is not the first time that we've introduced you guys to these guys. They're fantastic at what they do. But one of the issues that keeps continually coming up, and this is really interesting because I'm seeing this across the landscape. Saw it at the Salt Flats with Loan Pro. Saw the same thing at Jam FinTop, or I guess it's called FinTop now. Talk to partners at AFT, all kinds of different groups about this. It's a recurring theme now that we're all seeing. So I think nobody wants to claim, hey, I was first to say this, but we were kind of early adopters to the idea that the future is to have bank services implemented into merchant clients. And the fear for everybody has always been that fintech takes over small business. Tanner, you were at the Salt Flats. What was the number one thing everybody was talking about?
Yeah, on the private credit side of the world, they're all openly and actively having conversations about going after small business. It's coming.
That's it. So this is what we would call the inflection moment. And so this is maybe the most important video of 100 million of these that we've done and people I've talked to for years. I want to turn the heat up a little bit today. Just since July 1st, I mean, this is just in the last few months, we've lost 10 banks in Texas. 10 banks. There's states that have very little more than that. That's a huge loss. So we've also noticed that here's some statistics. I want to throw some numbers out at you guys. 2.15 trillion in deposits. 2.15 trillion in deposits that has gone away from traditional banks and credit unions into, let's just say, this other world, right? Whether that be crypto, whether that be fintech, it's people not opening bank accounts and putting their deposits in other ways. 65% of the Gen X and the boomers historically have been a loyal base for consumer, for community banking and for credit unions. And 65% of those losses have come from that exact group. The game is changed. I think everybody should kind of wake up to this right now. And there's another group out there, let's say a younger group, that is really interested in integrated financial payments and everything else that goes with that. So let's just say integrated investing, whether they want to invest into crypto or whether they want to invest in other things. Just like, and I talked to bankers about this when I was in Vegas about, we call it wealth management today, but there was a time where moving money from your bank to your Schwab or your TD Ameritrade or whatever, and doing business that way was odd. And now it's just seamless. I mean, we can move money back and forth. I can move money from my checking or savings over to my Schwab account back again. Easy peasy. It's seamless. That's where we're going with crypto. So we're going to have all three of these tiers seamlessly interacting with each other. This moment in time of being able to perform that function as well as perform the function of enabling merchant accounts. And, I saw one yesterday that Southwest Airlines, I can't remember who the other one was, but it was something like Walgreens. It was crazy. That's now offering debit accounts. So to say that things have changed is an understatement. Now, I got to tell you, I think, as much in tune with this as anybody, and 2.5 or $2.15 trillion floored me. I had no idea. And I think we know the numbers: 152 sponsor banks, 700 fintechs, there's 148, direct banks. We're on top of this. And that number still absolutely jolted me. I want to hear what you guys think.
It's, I'll take a crack at this. I think it's the amount of 2.15 trillion in deposits. It's going somewhere. It's going into the hands of other technology providers that are able to provide, bank-like services. And they're meeting the customers where they want to be, which is at a frictionless type of experience and model. And the more that you can do that, Dave, to your point of whether it's my Schwab account and I want to do investing seamlessly without friction and move money from, it could be my mom and dad's credit union or community bank for that matter, but getting rid of friction is, obviously vitally important, and being able to meet the consumers where they want to be, not where they are right this second, but where they want to be, a year from now. That's where we have to be thinking as a community, as a group. And it's going to take all of us, as I would just say, as advocates, but more so, we need more sponsor banks to be able to help meet that demand.
Tanner, Steve, got a question. Okay. Speed seems to be the issue. I've never lived in a time in my whole life where a vendor to a bank would actually bring business to a bank. And I look at you guys here, you're bringing business to a bank. I mean, you're bringing money to the bank. You're bringing deposits, you're bringing loans, you're bringing these things to the banker. It's like, okay, cool. So I have a relationship with this vendor who does good things for me, and he also brings me money. That doesn't happen in this world, and it's happening everywhere. Now, my problem with all this is the speed that it takes the banker to make a decision is not, it's not synergistic with the speed of the business owner. Can you guys talk about that?
Yeah, I think about that a lot. I mean, it's just, I joke around that it's like if you ran your business like the way the bank runs, you'd be out of business because of decision making. Not because of bad decisions. Banks typically make very low risk, good decisions, but they also take their time to do that. The difference between a small business operator is that you don't have the time not to make decision. Indecision is always the worst decision when you're starting up a company or managing a company, especially at a small scale. And I mean small scale as in like under 50 million. So which is most small businesses that they would be working with. So they need tools and products that are going to perform for them, not in quickly. They need tools, I mean, the joke of my whole life, and I haven't seen it change, and it's probably not going to make a lot of bankers happy. But the joke that I've always known, and this is my fourth startup, is banks don't loan money to people who need it. Banks loan money to people who don't, you know. So, um, you know, and that's the gap. The difference is there's a marketplace. There's a group of some BaaS banks that realize we're going to have to lend outside of our normal ratios. We're going to have to get comfortable with that. And by the way, $1 trillion sounds like they're doing pretty good with it. And there's plenty of secondary markets. Walt and I, because we have banks that won't take lines of credit, we're working with multiple level secondary markets, and these secondary funds are hungry and want it, and they're going to come for the community bank market. That all that money's there for the community bank market, and they're going to miss it because this secondary market is aggressive. They know loss ratios. They get that, like, they're fine. They're making way bigger NIMs than most banks would ever think about because they're not just scared by a loss ratio. And I realize that, the first thing somebody's going to say is, well, Steve, you don't have to deal with regulators. They don't have to deal with regulators. At the end of the day, if your NIM's right, you're probably going to be able to get your regulator in a good place. And that's what the aggressive bankers tell me.
Right.
Yeah.
I would agree with that.
Tanner, address something for me. So when we were talking with one of the, I would call them a major player in the BaaS space, and they were talking about the time it takes. It was like 2 weeks just to read enough of the information to get the right questions. We didn't even got to the decision point about bringing on a new program or a new fintech, but that time frame being cut down to like, what was it, 20 minutes? What he said?
Yeah, it was quick and easy. I look to first your point of a BaaS bank. I would say if you don't think that you're a BaaS or an embedded finance bank, then you're not long for being a bank, right? I mean, I'm there. I think everybody is there. To your point of losing 10 banks in Texas in a handful of months, ding dong. While there's opportunity on this side everywhere, let's just rip the Band-Aid off and say Evolve and Synapse scared the shit out of everybody. And you shouldn't listen to all the publications from all the idiots that know nothing. This is the world. It's going 100 miles an hour. There's more money here than ever before. And I think for me, I'll do a little finger pointing and, almost the a little sacrilege here that anytime two or more banks are gathered together and you're not having this conversation, shame on you and wherever you're at. This is what everybody should be talking about. I'm at the point of lots and lots of conferences that I don't go to anymore because the conversations are silly. It's the wrong conversation. This is the right conversation.
Yeah.
If you're having a consumer, if you're in the consumer game, you're competing against Google, Apple, the big banks, like you're not going to be there. You got two choices of community bank. You're going to have the commercial, and you can still do well in commercial. There's a lot you can do. You can get creative with your accounts. You can go after your businesses and your community, but you're still, depending on the size of your community, you still probably have to reach out and start thinking about SPVs on some level. And I know you have CRAs to worry about. So look, we're not speaking to this naively as if we don't understand regulators. We've sat with banks, we've been in regulator meetings, we understand that. But we're also, I think the thing that Walt and I laugh about, and with you guys too, is that the banks that have had that have had orders put against them, right? Let's just leave it there. They're the most aggressive bank still in the marketplace. They're doing like nothing is preventing them because what they realized is that they misstepped. They did something wrong. The regulators did what they were supposed to and say, hey, listen, you can't do it this way anymore. We're not telling you can't do what you're doing. We're just telling you can't do it this way. So just find a new way to do it. And that's what they've all done. And the problem is they're all full up on programs. They can't take anymore because they're the only banks out there being aggressive. Meanwhile, the 30 billion plus banks are just racking in deals because they don't have any competition from 10 billion and under.
Which is why I come back to the groups. I won't put any broader tip on that, but just groups of bankers that get together, right? This is an industry-wide problem that needs to be talked about, because what you just outlined, Steve, is that when we don't provide the place to come to as an industry, they're doing everything that they can to go around us. And they are clearly having great success at it. We as a whole industry are suffering. Everybody needs look, run your own bank and be an individual, but step back and look at the whole and say, where is the bigger voice? Somebody's got to pull everybody together and realize we're all collectively losing opportunities that likely don't come back.
Yeah.
Okay.
And then one last thing I just harp on is, and I'll let Walt run with this, is it's not about technology. That's the cool thing about this solve, is it has nothing to do with your core. Your core doesn't hold you back from this. No technology. Some banks are trying to solve it with technology. They're a little more far advanced, but you don't have to change your technology at all. What you have to change is your mindset. This is a mindset. All you need to do is act like a bank and do great oversight. That's what this is. It's not like we're trying to put these complexities around it. It's traditional lending at the end of the day. Like, do you approve this person? If you do, then give them a line of credit. We're trying to make it more than what it is. It goes back to old school lending at the end of the day that most banks should do well.
Yeah, I mean, to Steve's point, I mean, lending is not that difficult, especially if you've already been taught how to do it, which all bankers already know how, right? I mean, and it's a matter of, it's not a CRE loan, it's more of a consumer line. I don't know why everyone's so scared about it. I mean, 2008 was a long time ago when people and banks primarily got out of the consumer market, but it's time to go back. And I would tell you that Steve and I were in New York 2 weeks ago at one of the major card brands. They were doing a symposium for the day. They had 3 sponsor banks on stage doing interview questions. 2 of those sponsor banks had orders in the past. They're still up on stage. They're bragging about how much new deals they're doing. And the card brands said this. They're like, this is a great opportunity right now in the market segment, right? For both credit as well as obviously debit related card programs. The card brand in question literally told us, we have so many card programs that are coming to us, we don't have enough banks. And the 3 sponsor banks that were on stage, they all said, unless we make major investments into personnel and technology so they can give the actual expansion that they need, they said they're full up and they can't take any more programs. They're still taking, 9 months to a year to launch a program, and they've got backlog upon backlog.
All right.
So what does that tell us? We need more banks.
Backlogs of money, and we've lost 10 banks in Texas since July. Shame on all of us.
Yes. This is the inflection point that I was speaking about. You guys have outlined this perfectly. And I'm going to tell you right now, that you go to conferences and you listen to the paid speakers, it's the same old bullshit. Sorry, guys, it's the truth. And it's like, what topic should we cover next time when we have our conference? I'm like, how about the real world, man? I mean, it's like private credit, woof, just like that. I mean, there's sponsor bank, woof, direct banks, programs everywhere. We don't have enough sponsor banks. it's so much cleaner and easier than it's ever been. Opportunities are everywhere, and these people will absolutely. And to your point, Steve, about the NIMS, if we take cost of funds and someone's paying you to bring you deposits, you just knock the hell out of the left side of that equation. On the right side, instead of underwriting every single loan and taking these things from A to Z, Rocket sells them. We can go down the list of the companies out there, Upstart, the rest of them that do these programs. SoFi is trying to sell 20 billion loans. Okay. You can purchase just the ones you want, highest level tranche. You move the expansion on the right and on the left, your net interest margin is significantly bigger than it is today. Problem solved. Now, let's get down to why are we selling our banks? Because we can't make that kind of money. You have a leadership problem. And I'm going to say this straight across the plate. You got a leadership problem from the associations to the groups to all the way through the food chain. We have a bigger problem at hand right now. And I told this to a guy the other day, and he told me the next day, he said, man, Dave, this has been rolling through my head since you said it the night before. He said, we got the zombie apocalypse. And you said to me, we have the vaccine and they won't take the son of a bitch. And he said, it just kept rolling through my head over and over. We've got the vaccine. Guys, what we're talking about right here is the vaccine.
Yeah. I mean, listen, banks right now, community bank market segment is prime to really execute on being sponsors. I mean, it's not just like I'm saying like banks that are under $500 million in assets. You guys can still do things if you're that size. Maybe don't try to, try to steer a ship all at once, but you can still do smaller programs. You can still get your mindset into supporting your local community, and help people will bring you business. What I'm finding out though is that most banks are having this analysis paralysis, where they can't decide if they're going to be one of three things, right? The three things are, am I going to be a BIN sponsor? Yes or no? And it's not being a principal member doesn't mean you're a BIN sponsor, just so we're all clear. So are you going to be a BIN sponsor? If you're not going to be a BIN sponsor and you have capital you need to put to work, are you going to be extending that to credit lines and businesses, like as an example, FinTech customers and their customers downstream? Are you going to put your capital to work? Yes or no? And if you're not because you're too scared, then you know what? You want to look at the debt facility component and being participating in debt facility. You want age debt that is great after 18 to 24 months of seasoning. Great. That's a great bet to take, but then still put your capital to work in a debt facility with the partners. Because you know what? There's a bunch of bankers out there who are doing this right now, making a killing. But you got to
But
do
it's also
something.
hard to find that paper because you're going to wait 24 months, and then that's paper everybody wants. So now
Right.
you're competing against BlackRock for paper, or people who funnel up to BlackRock, right? So you're like, now you're in a game you can't play. You got to get into the game where you fit in.
Yeah.
And for years, like I went through this I was in the legal world for a long time, and I went through the transition in the legal world. And it used to be, if we were an attorney, big firms too. I worked with Wachtell Lipton, Skadden Arps, Latham Watkins, the largest firms in the world. And it used to be they put their shingle out and everybody would bring them business. And it got to be where it got competitive. General counsel started looking at the bills, and you can't just stay late and 10 people work and you buy dinners and you go out and do the things you used to do. Bills got cut down, and what ended up happening was they came up with a term that they needed because they didn't want to sell attorneys. They didn't want attorneys out there selling themselves. So they came up with, what do they got to do? They got to develop business. So they came up with business development, right? And so they started doing business development. Unfortunately, the banks are in that era. It's business development. You need to be out there selling your bank and what you can do, because the days of just putting your shingle up and having enough people stop by and bring you business is over. And if you think you're going to market with the Googles and the Apples of the world and go compete, that's not how you do it. Like if you look at there's some of the best banks out there, most people haven't heard of, but everybody who's in the business has heard of them.
Yeah.
Everybody who's in payments has heard of them. Everybody who needs to hear of them has heard of them. And I won't say their names, but if you reach out to us, I'll let you know who they are. I mean, I think they'd be fine with us sharing. But people in payments know who those banks are, and people in the real world would never know who they are.
Well,
So that's not
this is
who
the
your customers are.
frustrating part for me. We put together a conference where all these people are going to be in the same room. Okay. I mean, you're going to be there. There's going to be a lot of people like this that are talking about this topic. And if you want to save banking, this is the way to do it. Now, if you think you're going to go up against BlackRock and JP Morgan Chase and you're going to change the world on your own, good luck, my man. But if you want to go where the people that are making all the money is at, and this is what banking is supposed to do, is I'm not saying we should chase crazy ideas or anything, but when you see an entire generation, an entire shift in where the money flows are going, and you don't insert yourself in that. And here's the best part. It's coming right out of your bank. That's what, I mean, this is like shocking that, well, I'm not really feeling it. That's because your bank should have doubled by now and it hasn't. It isn't that you lost anything. You just didn't get the gains you were supposed to get. Had a great conversation with a major player over at one of the nationals. And I told him, I said, this is not an issue any longer of how do we make it viable and we cut the cost of regulatory burden or digital transformation or any other bullshit thing we want to talk about to where these 250 and below banks are going to be able to make it. I said, the answer is this, and it's plain as a nose on my face. You turn a 250 to a 500, you turn a 500 to a billion. That's the answer here, is make more money. We've been screaming it for so long. And when I talk with people like you, you're over here trying to give them money. And it's like, well, we have to have a 16-week decision process to decide. And it's like, I don't know a business owner in the world that runs at that pace anymore. That's history.
There's a key point. Look, not to be the weirdo contradictory guy here, but what the hell else is anybody going to do? Because that hasn't been working for 20 years, right? And it's like, I think the banks have just really caught up into sort of use digital transformation. I mean, me and these guys have been doing that for our whole lives. I still don't know what that bullshit means. I have no idea what that means. But the banks are just getting in that, right? And it's like, okay, so let's put together the right vendor stack and the right digital strategy, as if we all know what that means. And assuming that there is one. Does anybody on this call think the vendors have it all figured out, or they know where the silver bullet is? Nope. When it's too little, too late on the traditional side, I think Steve nailed it. Retail is over. Let's be focused on, I'm not against serving my small business owners and their families, sure. Let's be focused on small business and commercial, and that's our traditional strategy, absolutely. But then let's look to the new world where all the money is going. This is brand new, awesome stuff. People are making fortunes, and what is hyped up in the media as all the problem child bad narrative and consent orders, it's a freaking roadmap for how to do it right. This is wonderful.
Yeah. What I think,
I want you to say that one more time. This is really important. What
Yeah.
he's saying, guys, if you'll read the consent orders, they're consistent. And they're consistently telling you what they would like you to do. It's
Which
almost
means
like having guidelines.
which means they're not against it.
and it's underwriting at the end of the day, which they got away from some underwriting principles that most banks wouldn't get away from. So if you look at those banks or you ask them today, would they ever do that again? They're like, no. There was some trust and did they go down that wrong route? I think if you look back to our history and how we've dealt with vendors and banks, there was always three kinds of buyers in the bank world, right? There was the early adopters because they did want to be on the cutting edge. There was the fast followers, and then there was just the followers, right? And of that, and I think so many of them were waiting on BaaS. The initial adopters got out there. Then the consent orders came, and so everybody took a pause, and they're like, "All right, now with the fast followers, who's going to get burned? Who's not going to get burned?" But at the end of the day, like you don't really have that in a product. In a product, it's usually ooh, the product didn't perform, people didn't get performance, so that's what happened. So there's no feedback to what happened other than the marketplace. Like the feedback is that now there's $1 trillion that has left community banking. There's another $1 trillion on its way. If you look at the products in the marketplaces, fintechs aren't going anywhere. VCs are now starting to double down and invest even more. So if you look at it, there's you're never going to know what exactly is forward, but you know that behind you is not.
Right.
Like what we had in our past is dead. That's what we know for sure. So if you're holding on to any bit of that past, you got to lose that tug of war game and get forward as fast as you can because you can't keep holding on to the past. You had to figure out what the forward is. whether it's what we're saying or whether it's not what we're saying, what we all know for sure today is it's not what it used to be.
Yeah.
And it's
And
something out there in the future. And, you know, some of us think we have some ideas toward it and some of us don't. So it's just, that's where it is.
and you know, doubling down on what Steve said, you know, talking about fast followers, there's this pace in which banks are making decisions is what partially, you know, the fact that's going to kill them in the end because that's indecision. The other piece of that is you can't be dependent on one of three major companies to deliver you a technology platform that's going to help you do BaaS better. It's not their goal in mind. And if they do deliver that platform to you, it's for their financial benefit, not the banks, right? What you need to do is start thinking about process. Do I actually have the people inside of my four walls at the institution to actually make some decisions and to put policies and procedures in place that let me actually operate the way that I need to? Tanner, to your point, the guidelines are there through the consent orders. Dave, you said it too. The guidelines are there. Do I actually have the wherewithal to start building, or am I going to sit here in paralysis mode and lack of decision or wait for some vendor to give me the technology stack again that I think I can gonna be able to operate when people are doing this right now and being successful? Banks that are not long for this world.
This
Well,
is
hanging
hugely
out with
important. Oh, hold on just a sec. The large software companies, actually, I think they do a really good job of delivering your basic SaaS products at large at reasonable cost with
Yeah.
mediocre to reasonable service. They deliver products, not friggin' strategy.
Yeah.
And I think for like the last 50 years, banks have relied on the large vendor crowd to provide them with strategy. And here's what's wild, guys. It actually worked pretty well for a long time. Like that's crazy. Good for them. I don't actually throw any shade at any
Not
of
at
the
all.
providers because their products, they don't provide strategy. They provide products that are actually lots. I mean, when you have 85 products from one vendor, it's hard to poke too much fun, you know? It
Right.
all somewhat works and somewhat integrates, and I have all this and I can afford to run it all. It's building blocks to whatever your strategy is. But banks largely, you know, kind of the 70-80% problem, don't have a strategy to go with it, right? And that's what's always grabbed me with you guys. I know you guys would fit, and I know Walt's going to kill me, but you guys have awesome product, but you also at least talk and strategize, right? You're consultative. How about that, right?
Right.
And that
Yeah.
I think is really different and can't be expected, certainly from the big guys today.
The huge banker I
Education.
was hanging out with this past week, it was eye-opening for him. I took him to a couple of different places to just see what's going on. And he said, you know, I think I got this. And I need you to, you know, like sit down and whiteboard this for my team. And also it's clear I need to hire a guy like that. And he was talking about a particular bank that had hired just a FinTech guy, right? He's like, so if I hire a FinTech guy and have you guys kind of whiteboard this thing out, after that, it's a matter of which companies I would need to employ to get this. I'm like, you got it. It's that simple. He's like, okay, when can we schedule that to get that done? I'm talking about a guy doesn't even have a LinkedIn profile, does not work in this world. And to be exposed to it over a couple of days, it's not just think I'll take a look at that. It's a done deal. It's a decision. We're not going to go down the acquisition path, dilute our shareholders. We're going to grow the bank this way. And this is, you know, it was unequivocal in his mind. And I think if a lot of the bankers had exposure to this, and that's why we do the friggin' roundup.
Let me close the
Here,
loop on
it's
that.
free. See what it's all about. I don't think that there's a lot of people given the same set of facts that are going to come to a different set of conclusions here. And I think what we as an industry need to do is get off our ass and start giving the facts. That's it. It's that simple and it's straightforward, whether people like it or whether people don't. I love Tanner's point about retail. It's gone. FinTech's already taken that.
One of the things that I said, me and that banker were talking, and you know, I think we've all done a poor job of trying to explain what this thing or this area is. And it's a foreign concept. I mean, it actually is, right? And so I was talking to him, I'm like, let's work from your example. I bet your biggest commercial customer is probably a school or a church. And he goes, hospital. I'm like, okay, let's pretend that the hospital called tomorrow and they wanted to offer a credit card from the hospital. Now use your banker brain, which is a lot better than mine, and think about the steps and how you would do it. And you could see the wheels spinning on his head of, he had some holes in his thoughts, but he's like, I guarantee you that guy would have figured out that problem. But when we say banking as a service, it's like, right? Okay, and what you guys do that's so cool is you have shitloads of hospitals that have banks that don't know how to offer credit, and you're like, hey, I need a bank to do this hospital's credit card. That's awesome, right? Really cool.
I think that's one thing we really picked up over the last, it was a little bit of our theory when, when we were starting this thing up, but and it's something that we learned when we were over at Moov is we met with so many different organizations from, top 100, Fortune 100 to, the smallest startup you could think of. But the thing that one thing you're learning is in established businesses that we interviewed and talked to was that everybody's on to what fintech's doing. So like everybody, it's not like these modern businesses are just watching fintechs and they're like, oh my God, how do they do that? They're thinking of how to do that. And a lot of those are we're talking to as clients and we're helping them all the time and trying to explain to them, I mean, there's a large client that we're working with now that works with one of the major payment companies out there. And basically they just checked the box and they did a deal and that company's making money and it's good for that company. But the flow of funds and the process they put them into isn't the best for that company. And so you got to make sure you're working with vendors that are like not trying to check the box on their finances, but check the box that make sure that they're going to bring you the best flow of funds, the best way that you can support this, and most of all, something that you can replicate so that you can get to scale or get to where that you can really see the revenue dollars come that way. But I think more importantly, it just starts with being open to what you could even do. We joke about this all the time. Guarantee there's deals within your current group of commercial clients. If you just went with them and sat down and had lunch with them and asked them what are all their problems, I can guarantee you a bank could solve a lot of them.
Yeah.
I wish I had a bank to try to solve some of those to do that. I'll tell you that. I mean, bankers would be like, it's not that easy. And I know it's not that easy. Trust me, I know it's not easy, but it's also not as hard to get to the other side because there is that fine line where you don't have to call yourself a Bass bank. You just have to call yourself a modern bank. Just get modern in your thought thinking.
That's it. That's it.
Businesses are having to modernize all the time. AI is changing the world. There's no way banks don't have to change for that. It has to change. And it can't just be like an AI product. There's no easy button, unfortunately. And I think it does really start with education of people at the bank. Because whenever we talk to people at banks and you explain this, like our last 30 minutes, they're like, yeah, that makes a lot of sense. It's not like if you're talking to somebody and this doesn't make sense, then I mean, that's another issue, so.
I'm going to tell you something, guys. I appreciate you doing this today. I have a lot of people that are like, man, I'd like to really just know what you guys talk about when you hang out. And that's what we want to do. And we might clean up the language a little bit, just a little bit. But this is what it's like when we all hang out together. And you want to know what it's like on a Friday night when me and Tanner are shooting the bull with somebody, or we got a conference call going on at 10 o'clock, everybody having a beer kind of thing. We're sitting around a campfire. This is what we do. We talk about these things.
Yeah.
I appreciate you guys. Walt, will you give me final thoughts, man? I know there's something behind those eyes. I can see it.
Yeah.
I just,
Be careful.
If anything, it's maybe it's a plea, right? It's bankers who are out there listening to this, and maybe you think I'm snarky, but you have the power to be able to make so much change and things happen that actually are going to go your way. It's just move faster. You got to move with what business is doing today. You can't take 16 to 20 weeks to decide if I'm going to go ahead and, get off the pot, so to speak. You need to go ahead and move with the speed of business. And speed of business is every single day, things need to be happening in a forward progression and manner. And if banks can start figuring that out and understanding that, hey, maybe I can't be a BIN sponsor right out of the gate, but I can learn how to put my capital to work in some other way, shape, or form, or do something just a little bit different. If you're making those changes and making that forward progress every single day, you won't be dying out. You won't be having to worry about getting an acquisition. You'll be actually growing, but you got to make that first step.
Love it. Well, guys, this was like really cool and fun. Thanks for joining.
Always fun. Can't wait.
Always good, man. Always
Thanks for having us. We're very appreciative.
All right.
All right. Take care, guys. Bye.